Howdy folks, welcome to my channel. I am the Huggy Bear. I just started this channel. I'm someone who's traded for almost 30 years. I've seen a lot of different markets. I wanted to share my trading strategies, methodology with others out there in the YouTube ethos, and hopefully offer some unique insight into my trading so others can learn. With that said, let's get into the recap. First up is Facebook. Facebook fell on disappointing earnings today. I didn't trade it, but I would consider trading the stock if it ripped down to the 230 level. At that point, I would probably be looking to sell puts at the 220, the 225. My thoughts are the short-term risk is out of the stock, and that might be a setup for a pretty decent trade, and hopes of just collecting the premium and then never being assigned the stock. So I'll keep you posted on that. One way you can find my real-time trades is just following me on Twitter at HuggyBear7, and then on the nightly recap. Next up are the QQQ and the SPY ETF. I've been trading these pretty actively, especially with all this volatility. I came into the day with puts on both the Qs and the SPYs. I did get a little lucky with Facebook earnings, so I did close the trade today. I will, however, look to re-enter this trade if we get a considerable gap open tomorrow or just a rally, and I'll let you know on Twitter or on the recap. You know, when you're trading, the strongest metric is the price, and nothing else really matters. If the earnings are great and the stock is going down, well, the stock is going down. So I typically will just go with the trend until the trend changes. So in this case, I'm just going to be riding this trend because I still think we have some consolidation. So on any significant rallies, I will probably be scaling in on my puts. Next up, GM. I entered the GM trade after they reported earnings, and I bought puts, in the money puts. I typically like to buy in the money puts 3 or 4 months out, as long as there's not a ton of premium. And in GM's case, there's very little premium, so it's great when there's volatility. And so I closed half of my position at the end of the day on GM, and then I'm still writing a relatively pretty small position GM in the form of puts. So I will probably, if we somehow rally up, I'd probably enter again at like 60, and if we get a rip down to say 50, I'll probably exit this trade. But this one, there's not a ton of risk on this trade. It's not that volatile. It just happens to be volatile right now. My gut and my thought is that this stock is going to continue to trend down as they transition from their gas cars, ICE vehicles to electric. Same with Rivian, Lucid. It's going to be incredibly difficult for them to make money for quite some time. So I have a fairly strong conviction. That doesn't mean the stock can't go up, and a lot of times those are just great entry points to enter with puts again. And of course I use puts on my shorts because of the defined risk. Obviously when you short a stock, you have unlimited risk going against you. So my risk is defined by buying puts. Next up is Netflix. I did flip Netflix today, but I didn't trade it but one time. I did trade it the other day when it was up at the 457, and I did buy some out of the money puts that day, and I bought some deep in the money puts. and it was only a half position. I was thinking the next day, oh, we'll gap up, and then I'll lay on a pretty decent trade. It just didn't happen, and I got lucky. The stock gapped down. I exited the trade, and then I'm just waiting for it to set up again. I would consider buying if it got down to the 380, 390 range. And at that point, I would probably sell some puts, maybe $10, $15 out. And yeah, that would be what I would consider. And then if the stock rallied up to say the 440 level again, I would probably consider uh, buying puts again, just to follow the trend of the market. And not to mention that they had disappointing earnings. Last up is Tesla. I do own Tesla, so I do trade around it quite a bit. Recently I've been selling calls, and earlier in the week I was selling puts. I sold the 760 put on Monday on that rip down. And then we had, that sharp run up. So I've already exited that one. I think I entered and the premium was like $20, and then I got out when it was around $2, and I've just been waiting for it to set up again. My thoughts are that this is probably range bound for a while as the market consolidates. So maybe it's in a range from, say, 650 to 1,000, and if it gets close to the 950 level, I'll probably be selling, way out of the money calls, like 100 points higher on weekly calls, and just to pad like any short-term trading range, or if the stock trends down more. And then on the other side of that, if the stock trades down towards the 800 level, I'll be looking to sell puts again, probably like 60 to 80 points, 50 to 80 points lower. It really depends on the momentum of the market and what the sentiment is at the time. But that is my strategy a lot of times. So there is some benefit to just owning this stock because it does give you some options in terms of collecting premium. Or if you want to, add to your shares, it's just a great selling puts is a no-brainer because it's like buying at wholesale. First off, you get a great price, and then you get the premium as well. So, I'm more aggressive in the 750 area than I am up here, just because I already own it. And so I'm always shopping and ready for the blue light special. So those are my thoughts on the market. I do think we grind a little bit lower, and after earnings season, especially, it was kind of a mixed bag. Google, Apple, they were all stellar, but I think there's just a slight sentiment change, and maybe slight is not the best word, but there's a pretty strong sentiment change. And when the sentiment changes and the psychology of the market changes, it kind of trumps everything. Great earnings, it just doesn't matter. Stocks will generally trend down. So I haven't added anything to my investment account. I'm waiting to get past earnings. I do own Microsoft, Google, Amazon, Tesla. Those are kind of like my core positions, and I typically never get out of those. What I will do is I will buy them when I think they're at a great price, and then if they rip up, I'll sell a portion of it, and then just keep holding on. So right now, I've sold a lot of my shares, but I still have like my core position. I actually sold. I sold those shares maybe about a month ago. I can't remember. Somewhere there, about a month or so ago. But again, I still own a core position. So anyway, I think we've got some great trading, and I would be there's probably some great buys out there. I I don't have the conviction right now to jump on anything if I still think the market's going to trend a little bit lower. But anyway, thanks for tuning in. Hopefully, I can not ramble so much and just get to it as I go on this little experiment here. Anyway, hope you enjoyed. Take care.